Coming up today, stocks pull back, Jamie Dimon sees risks rising, let's cool it with the bubble talk, Hollywood gets worried about AI, the hottest stocks from today, China tightens grip on rare earth, and a state-backed battle for global AI dominance. We live in interesting times, guys. Let's go. And finally, a bit of a bearish day for a change. We've been seeing plenty of everything rallies. No surprise to see a bit of a everything pullback. The only green on the screen here, the inverse ETFs, but the only real sector that finished materially higher, biotech. A little bit there in staples, with uranium and silver holding up, but we did see a bit of a pullback in gold and silver, which I'll show you later on in the charts. And stick with me because I'm also going to talk a bit today about the global AI race between US and China. We've seen some fresh moves coming out of China today, taking aim at the critical minerals used in many future technologies. So we're going to talk a bit about that. I'll also give you guys an update on my stock picks and ETF portfolio performances. But first, as usual, let's take a quick look at the market and where we currently stand. Today is Thursday, the 9th of October. Historically speaking, the S&P 500 often finishes down, and that's exactly what we got today. Also with my reversal signals indicator firing off the first signal, suggesting we could be on the cusp of a short-term pullback. As usually when we see them, we can get a slight pullback or a consolidation, and sometimes a bit more so. Looking at every time we got the reversal signals last year, they did indicate pullbacks were just around the corner. And we also got one on the Qs as well today. The Nasdaq and the mid-cap index actually just closed below the 50-day VWAP for the second time this week. And I've also just added a new ETF to my indices lineup here, the Roundhill Meme Stock ETF, launching on the market yesterday. That'll help give us an idea each day of how all the hot stocks that retail traders love trading are performing as a collective group. And so we still do have plenty of rotation out there, like I'm going to show you on the charts later, what the hottest stocks are, and a few of them we own ourselves as well. As bullishness is coming back to the market, we just got one of the highest bullish readings on the AAII Investor Sentiment Survey, coming in just below 46%. We haven't seen that wider gap over bearish readings quite a while, coming on the back of very low realized volatility in the market, at least at the index level. S&P 500 not moving around all that much at an annualized volatility of about 10%. As we quickly approach Q3 earnings season, set to kick off next week, a bunch of the big banks reporting on Tuesday. The following week we'll be looking at Netflix and Tesla, and then we really get into the thick of it the last week of the month when most of mega cap tech reports. And once again, one of Wall Street's most notable men, Jamie Dimon, CEO of JP Morgan, constantly sounding the alarm. I guess he'll eventually be right, but this time he thinks there's about a 30% chance we see a sizable correction in the stock market at some point over the next year, way ahead of what the market is pricing in, around 10%. As we're in the thick of bubble mania, that is, people talking about the bubble. Another one today, Cantor, the AI boom is not a bubble, as they see hundreds of billions of dollars of demand still ahead and believe Nvidia's opportunity in the market has more room to run. But I agree with this article titled today, let's cool it with the stock market bubble talk. Hard to imagine the bubble is about to pop when everybody and their dog is talking about it. And if we were on the cusp of another bear market, that would actually be a little unusual. Looking back in history, there's quite a bit of space in between bear markets. You go from 73 to 80, that was 7 years. Another 7 years before we got a quick bear market in 87. Another 13 years before the market topped out in 2000. Then it was another 7 years before the next bear market. Again, another 13 years, 2020. Then we just had one a couple of years ago. So if we did get one now, that would be 3 bear markets starting in less than 5 years. Something we haven't really seen before. And so I know everybody's talking about a bubble, but fundamentally speaking, I still don't think we've reached saturation point in AI usage, which could indicate we are closer to the top. Just being reported, ChatGPT is now being used by 10% of the world's adult population. Now, if that were closer to say 40 or 50%, one could make the argument that we're nearing some sort of level of saturation. Obviously, the entire world is not going to be using GPT. But if it were at 50%, then you could say it's already seen most of its growth, but its growth continues to accelerate even quicker this year compared to last year. As a lot of us watching this video are tech savvy, or what's known as early adopters, there's still plenty of the mainstream public that are yet to actually start using AI, just like it took years and years for everyone to get online and start using email. And AI has come so far, even in just the last 2.5 years it's really been around. You're looking at an AI-generated video clip of Will Smith eating spaghetti just back in March 23. Now look at the quality of AI-generated video now. With Elon Musk just saying the other day, by the end of next year, he thinks XAI will be able to create a watchable AI-generated movie. No doubt a threat to Hollywood, who are starting to push back on OpenAI's video generation app Sora. They see it as a significant risk, and they very much should. Because like I've been saying, what happens to not just content creation, but all industries when AI AI can simply do a better job than humans and for cheaper. We're pretty much all under threat in more ways than one. And that's the topic of today's video. I think we're pretty much in the space race of the 2020s, referring to the original space race that turned into a Cold War between the States and the Soviet Union, kicked off by growing interest in space exploration in the late 50s, which went on for a good 10 years or so before making it clear that America had won that race. Now we've got a new one: artificial intelligence, GPU chips, and China has for a while now vowed to overtake America in global AI dominance. I don't think a lot of people understand how determined the Chinese are to dominate AI and robotics and become the world's superpower, military and economically speaking as well. We saw that earlier this year. On the day Trump was sworn into office, they dropped DeepSeek and a clear signal they're trying to come after American tech. Of course, those fears back then were overblown, but they're really not that far behind America, and they're not shy about their goal of being the global AI leader. You can clearly see their playbook with massive state-led funding, national compute clusters, fast-track data centers, and they're pushing for full-stack control. They do have some key advantages in energy, actually not as regulated as you may think, a lot more advanced in robotics than you may realize, pushing for a digital Silk Road, building infrastructure in other countries, and really trying to push ahead at light speed to take the lead in this very important industry. At the same time, trying to limit America's and the West as a whole development, as they currently dominate rare earths in the production and processing around 90% of the world's global supply. And we just got fresh news again today of them once again tightening grip on rare earth exports, expanding controls on lithium batteries, along with new regulations and adding more and more American companies to what they call an unreliable entity list, banning them from trade and investment. They are directly trying to choke our development of AI-infused products, robot, clean energy, military, etc., for which Trump's just responded, maybe we'll have to stop importing massive amounts from China. Remember, America still currently has leverage over China, with the most imbalanced trade relationship the world's ever seen. And nobody understands this better than Jensen Huang, born in Taiwan, running the biggest AI chip company in the world. Here's a recent clip of him talking about this on CNBC. Take a listen for yourself.
How far ahead of China do you think we are in terms of AI development at this point? How close?
Depending on which layer of the stack, but overall, I would say we're not far ahead. If you look at the entire stack, they're way ahead on energy. I am so happy that President Trump leaned into pro-growth, pro-energy growth, so that an entire industry above it could grow. If you could just imagine, without President Trump's pro-energy policy, that entire layer above the energy would have been constrained. China's well ahead of us on energy. We are way ahead on chips. They're right there on infrastructure. They're right there on AI models. Our models are better overall. OpenAI's is better, Anthropic's is better, Gemini's better. However, their open source models are well ahead of us. And then on the application layer, we have to be quite mindful because their applications are very fast moving. Their society is very quick in adopting new technology. They're under-regulated they don't regulate heavily at the industrial level. And so the applications in China are advancing incredibly fast. This is an area that I'm quite concerned about. I hope that American companies and American society are going to be fast in adopting AI applications, because ultimately this industrial revolution wins at the AI application layer, at the diffusion layer.
So as he said, they're not that far behind. They've got an advantage on energy. He's happy the president is opening the door. And I think that's going to continue to be a very good space for us investors to invest in, because energy and grid capacity is the bottleneck for AI's growth. But America is still a little bit ahead on chips and models, but still with heaps of room to improve on AI applications. And so the new US government realizes this. They're not asleep at the wheel. They've been proactive and trying to really get behind the industry to retain and accelerate America's leadership. Critics are calling this state capitalism, blurring the lines between government and business. However, I think it's a necessary step to really compete with China, which very much engages in state capitalism at extreme levels. So you got to fight fire with fire. And that's why the admin's trying to get behind companies of strategic national importance like Intel, reshore chip production, invest in the companies that mine the critical minerals that make all these key technologies, as it also fuses in with the military as well. And so you just look at what's happening in American tech right now. The usual rivals aren't just competing, they're linking arms. The admins brought them together, and no doubt they've discussed behind closed doors who their real competition is, what's at stake, and what their objectives are. And that's because AI is now a national scale project. project needs a lot of hardware, it needs a lot of power, it needs a lot of data centers, it needs a lot of investment, it needs a lot of talent because the stakes are huge. And so this isn't all happening in a vacuum. Washington is clearly signaling that AI, advanced chips, automation are strategic industries, along with the commodities that help to build them. And this is all necessary to counteract China's fast rise, along with their global ambitions. And this has already been kicked off since last year when they started the Stargate project, with the goal of advancing American AI leadership through massive infrastructure investment, bringing together the leading companies to, like I said, join arms instead of competing against each other so much, and build the infrastructure they all need together, which overall will be better for the country. Instead of them all trying to individually do it alone, the whole industry now is acting more like one team, because like I said, they're competing against another big team in China. You kind of think of it like a GPU Cold War, the race to own the future. And we just saw a huge one a couple of weeks ago. Nvidia intends to invest $100 billion in OpenAI. These are big numbers. So along with the industry joining arms and government backing, I think it's really transforming the market and genuinely giving America a much better chance at retaining and accelerating leadership, which they can hopefully win, just like the space race. Because I, for one, don't want to find out what a world with China as a top superpower looks like. I'm all for American exceptionalism to continue, because what's the alternative? Europe? I don't think so, as Europe is on its way to no longer being Europe, as the Middle East successfully expands into Europe, like they always planned and wanted to. So expect to see more deals. This is going to go on for years. Government-backed companies, direct investment, and all these big tech companies helping each other. Nvidia just this week coming out saying they're going to invest in Elon Musk's XAI, which I think could very well be one of the top AI companies in a couple of years, as Elon too has big ambitions. And so it's a pretty clear signal from Washington where to invest. AI, chips, space, crypto, energy, drones, robotics, defense, healthcare, rare earths, manufacturing, self-driving cars. I mean, these themes have been working really well for a year or two now. Maybe we still do have a lot further to go, as we've got a really strong tailwind coming from government. And what's interesting is China and Russia have been accumulating gold like crazy the last couple of years. Much more so than Western countries, which have actually seen a decrease in their gold holdings from 25 years ago. And China's showing signs of increasingly stockpiling gold reserves themselves. Are they preparing for something? Maybe something in Taiwan. And so everybody talks about the stock bubble, the AI bubble. But what's one asset nobody labels as a bubble? Could it be gold, which has actually outperformed the S&P 500 since 2000? What would a rug pull on gold do to China and Russia? They're betting their future reserves on the precious shiny metal. Maybe that becomes a bit of a geopolitical football, because the narrative is gold and Bitcoin are ripping because of threats of hyperinflation. No doubt is there from excess government spending, but like I've been saying for a while, I think AI is going to be massively deflationary, removing the human cost of labor, allowing companies to increase their profit margins, which will allow them to decrease their product prices. Could turn out to be massively deflationary. In addition, for America leading the world on crypto and stablecoins, which helps to reinforce the US dollar's global currency reserve status, because every time someone buys a stablecoin, the stablecoin issuer uses that money to buy US treasuries. That's how they make money. They earn the yield on US government bonds, and the stablecoin's backed one for one by US treasuries. And that's creating a rising demand for US treasuries, which helps to keep yields low as well. In addition, for demand on a digital US dollar going forward. And I agree with this piece here, stablecoins aren't the threat to your money that the banking industry would have you believe. Banks are kind of reluctantly getting into this. A lot of them still wrapping their heads around it, and plenty of the old school figures don't like it because they have to give up control. Because if the world does move to doing finance and transactions on the blockchain with stablecoins, government will still have somewhat control and regulation, but the banks not so much. But I agree with what Brian Armstrong, the founder and CEO of America's largest crypto exchange, Coinbase, said today on X. The internet gave everyone a voice. Crypto will give everyone free access to money and fairer financial systems. When access to finance is universal, borders matter less, and value moves at digital speed. The ripple effects? Governments rethink money, and finance evolves into an open source system, inevitably on chain. The future is closer than most think, and that's why Coinbase is building the rails to onboard the next billion. And so they're big on Ethereum. They actually earn half of all revenues from USD coin, the stable coin. And that's because they can see what's coming. And so I think you could almost call saw Coinbase, a company of national importance as well, current market cap 99 billion, as they're partnering with Wall Street, big corporates and government on their crypto strategy. And just looking at the price action we're getting out there today, Nvidia actually broke out to an all-time high, close to hitting $200 a share for the first time. And looking at the generative AI and tech ETF chat, still in a really solid, persistent uptrend here, doing better than the market overall. And the AI infrastructure trade has been the trade over the last couple of months. Absolutely red hot, led by Iron, quickly becoming the signature company in this space. Me and my Stock Picks members now up almost 300% on the stock and still riding it. Others as well, like Hive Digital Technologies, another crypto miner, getting into the compute powering space. Now almost a quick double for us. Big move up and a new retail favorite, Unipath today, up 18%. On news they're partnering with OpenAI to develop a ChatGPT connector. Still a small company under 10 billion market cap. Going out to the monthly chart, like many of these growth stocks, unbelievably, are still well off their 2021 highs. I think a lot of people forget how crazy things did get in early 21, but forming a nice base here on accumulation, this could definitely have a long way to run, as they're involved in robotic process automation and now getting into agentic AI application. No doubt easy to see why it's a retail favorite of late. Serve Robotics, monster move today, up 28%, huge volume, as they just announced a partnership with Uber Eats competitor DoorDash, making the future of food delivery robotic, once again powered by AI. With now Serve Robotics working with DoorDash to expand its footprint across the US, starting in LA, they'll then move into Miami, Dallas, Chicago, and Atlanta, and they've already got a partnership with Uber Eats. Like I said a week ago, definitely a moonshot, but huge potential, still with a market cap of only 1 billion. Also moving big out there of late, cannabis stocks, still speculation. The admin will hopefully order the DHS and DEA to reschedule cannabis, still on the same level as the hardest drugs out there. And just looking at the related ETF, looking pretty good on the chart here, forming a bull flag. We also got some other stocks out there doing well today, energy fuels, which we just recently invested in our Stock Picks portfolio, because like I told my members, they operate the only conventional uranium mill in America at a strategic US choke point, involved in both uranium and rare earths, like the perfect combination. For current policy tailwind, they got a strong balance sheet, no debt, big runway in front of them, with really big volumes coming into this stock. And just giving you guys an update on the Stock Picks portfolio performance. Now tracking on a Sharpe ratio of 1.7 and currently up 60% in time-weighted returns, which is now more than triple the benchmark Vanguard Small Cap Index Fund. So it's been doing very well of late. Currently holding 34 positions, very well diversified, not just in American stocks, but also some international stocks that trade on American exchanges as well. And just a quick update on the new ETF portfolio, only kicked off last Wednesday. Off to a pretty good start here, currently up 6.7%, well ahead of the benchmark, the Vanguard Total World Stock Index Fund. As again, like my Stock Picks portfolio, the ETF portfolio is very well diversified across many different themes as well. So I've had quite a few members reach out to me and express their satisfaction with how it started and how the portfolio is going to be run. But just as a reminder, please don't expect every week to perform like this. It has been a great start. And momentum investing can deliver really good long-term returns, but it can also come with painful short-term drawdown and periods of underperformance. That's the price we pay for that long-term outperformance. Those that can stomach the volatility earn a premium. And so you have to really believe in the power of momentum investing and make a commitment to stick to it long-term is the only way to succeed, because if you base your feelings towards it on week to week or month to month results, it makes it highly likely that you'll give up in a drawdown, because if all your feelings are just based on the last month's performance, when a soft month comes along, that's what causes some people to give up. And so I know sticking to it through the ups and downs is much easier said than done, but that's what makes a good investor, staying disciplined and staying committed. And that's why I'm going to do my best to demonstrate how that's done in real time for many more years to come. Because like I've been saying, it's still early days for us. I eventually want to get my Stock Picks portfolio up 1,000%, once again growing multiples of what the market delivers. So thanks again to everybody who jumped on board. It's been great hearing your feedback, and I'm excited to run these portfolios for decades to come. And just wrapping it up, looking at some key markets out there, we're getting a bit of a bounce in the dollar here that we're not really seeing the same in bond yields. I think it may have to do a bit with the selling around the rest of the world and other currencies, which is affecting assets priced in dollars. We saw a bit of a pullback in Bitcoin and Ethereum today, along with the biggest down day in gold we've seen in some time. Also with some reversal signals, downward thrust momentum on big volume. Very well might see gold consolidate and pull back here for a little bit. Similar story for silver, a little bit of a spinning doji, has been performing really great, so no surprise if it does consolidate and pull back for a little bit. I'm still more bullish on silver than gold, and I'm still more bullish on uranium and silver, looking pretty good, consolidating near the highs here. And there's a look at volatility pricing in the market, still relatively low with the VIX at 16.4. Bonds not moving around much at all either. But like I said, we do have signs we could be on the cusp of a little bit of a short-term pullback, which is no doubt well overdue. Surely we must be close now, right? October, the most volatile month of the year as we get into Q3 earnings season. But I think we're going to get good numbers, and any dips we do get may just get bought. Otherwise, that's a wrap for today. Thanks very much for tuning in. As always, I'm interested to hear your comments on the US versus China battle for global AI dominance. What do you think about all that? As always, it's just my opinion. I don't expect everybody to agree with it, and you're always welcome to share yours as well. Thanks very much for tuning in, and I'll be back again this time tomorrow. Cheers.